Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Twist Bioscience Corporation quarterly report. Twist Bioscience Corporation offers a wide range of businesses and services that cater to various industries. At the core of its operations are synthetic DNA-based products, including synthetic genes and gene fragments used in product development for therapeutics, diagnostics, chemicals, materials, food, agriculture, data storage, and academic research. The company's product offerings also include oligo pools used in targeted next-generation sequencing (NGS), CRISPR gene editing, mutagenesis experiments, DNA origami, DNA computing, data storage in DNA, and other applications. Additionally, Twist Bioscience provides immunoglobulin G proteins for customers focused on drug discovery and development. In the realm of NGS tools, the company offers library preparation kits, human exome kits, fixed and custom panels, alliance panels, methylation detection kits, and fast hybridization and full RNA sequencing workflow solutions. These products are used in various applications such as diagnostic tests, population genetics research, biomarker discovery, translational research, microbiology, and applied markets research. The company also provides synthetic SARS-CoV-2 RNA reference sequences, synthetic monkeypox controls, and respiratory viral controls for the detection of diseases in a research setting. Furthermore, Twist Bioscience offers precision DNA libraries for antibody engineering, affinity maturation, and humanization, as well as an antibody optimization solution to enable simultaneous optimization of multiple characteristics of a given antibody. Overall, Twist Bioscience Corporation's businesses and services are diverse and cater to various industries, including biotech, pharma, industrial chemical, agricultural companies, academic labs, and research institutions. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The stock price of Twist Bioscience Corp. has dropped significantly over the past year due to various market and industry factors. One possible reason is the company's failure to meet investor expectations in terms of revenue growth and profitability. This can be attributed to increased competition from other biotechnology companies, which may have led to a decline in demand for Twist Bioscience's products. Another factor that could have contributed to the drop in stock price is the company's high research and development expenses. As a biotech firm, Twist Bioscience invests heavily in R&D to develop new technologies and products. However, these costs can be substantial and may not yield immediate returns, leading to concerns among investors. Additionally, changes in government regulations or policies affecting the biotechnology industry could also have impacted Twist Bioscience's stock price. For instance, if there are increased regulatory hurdles for companies like Twist Bioscience, it may lead to a decline in investor confidence and subsequently affect the company's stock price. Lastly, market volatility and economic downturns can also cause a drop in stock prices. If investors become risk-averse during times of economic uncertainty, they may sell their shares in biotech companies like Twist Bioscience, leading to a decrease in stock value. In conclusion, the decline in Twist Bioscience Corp's stock price over the past year is likely due to a combination of factors including failure to meet investor expectations, high R&D expenses, regulatory changes, and market volatility. The primary drivers of revenue growth or decline can be identified through an analysis of the extracted summaries. On the growth side, several key areas have contributed to increased revenue. In terms of geographic regions, Americas and EMEA have seen significant increases, with 8.7% and 35.6% growth respectively. Additionally, DNA synthesis and protein solutions revenue has grown by 27.7%. Therapeutics revenue has also experienced a notable increase, rising by 39%, while global supply partners revenue has seen a 50% surge. Furthermore, the growth of NGS applications revenue and DNA synthesis and protein solutions revenue have been highlighted as key drivers of revenue expansion. These areas have shown impressive growth rates, with NGS applications experiencing an 8.2% increase and DNA synthesis and protein solutions growing by 27.4%. In contrast, the only significant decline in revenue has been from related parties, which decreased by $2.6 million. However, it is worth noting that this decrease does not appear to have had a substantial impact on overall total revenue. Net income experienced fluctuations over the period under review. Initially, it showed an increase from $0.1 million to $0.3 million on page 25. However, this trend was short-lived as net income began to decline. On page 28, the net loss decreased by $1,087,000, indicating a reduction in losses rather than an actual increase in profits. The downward trend continued with a further decrease of $1.1 million on page 30. Profit margins also underwent significant changes during this period. Although not explicitly stated on page 25, it is likely that profit margins decreased due to higher stock-based compensation expenses. However, as the net loss decreased on page 28, profit margins began to improve. This trend continued with further improvements on pages 31 and 32. Notably, gross margin increased by 3.7% from 48.3% to 52% on page 32, indicating a significant improvement in profitability. The financial performance of a company can be a crucial indicator of its overall health. In this case, the company's operating cash flow has been a point of concern. According to the provided information, the company has consistently generated negative operating cash flow in both years. This trend is not a positive sign for the company's financial stability. Negative operating cash flow indicates that the company is spending more money than it is generating from its core operations. This can be due to various factors such as inefficient management of resources, high operational costs, or inadequate pricing strategies. The persistence of this issue over 2 years suggests that the company needs to address these underlying problems to improve its financial performance. Without a significant improvement in operating cash flow, the company may struggle to meet its financial obligations and invest in growth initiatives. The company's debt level has undergone significant changes. A review of the financial data reveals that total liabilities have increased by $13,087, rising from $168,903 to $181,990. Furthermore, operating lease liability has also seen a substantial increase of $24,058, growing from $61,750 to $85,808. These notable increases in debt levels suggest a significant shift in the company's financial position. However, it is worth noting that interest expenses are not directly reported in the provided tables. This lack of information makes it difficult to assess whether the increased debt levels have resulted in higher interest payments for the company. Nevertheless, the substantial rise in total liabilities and operating lease liability indicates a notable change in the company's financial landscape. The performance of various segments and regions in the given data reveals a mixed outcome for the year 2025 compared to 2024. On the positive side, the Americas region showed significant growth, with an increase of $4,672,000 from $53,709,000 in 2024 to $58,381,000 in 2025. Similarly, the EMEA, Europe, Middle East, and Africa region also demonstrated improvement, rising by $10,061,000 from $28,304,000 in 2024 to $38,365,000 in 2025. However, not all regions fared well. The APAC Asia-Pacific region experienced a decline of $252,000 from $6,700,000 in 2024 to $6,952,000 in 2025, indicating a decrease in performance. Management's outlook for the company appears optimistic, with sufficient cash reserves to fund operations for at least 1 year. They emphasize that recent operating results are not indicative of future performance, suggesting a focus on long-term growth rather than short-term gains. The company is investing in its commercial organization and corporate infrastructure, which will likely lead to increased expenses in the near term. However, management believes these investments will ultimately drive growth and improve profitability. The company's strategy involves moving up the value chain by developing more complex products, such as proteins, and expanding into new applications that can benefit multiple industries. Management is confident that their products have the potential to make a significant impact on health and sustainability across various sectors. They are committed to investing in research and development to drive innovation and growth, with a focus on creating value for shareholders while also contributing to broader societal goals. That concludes the financial summary for Twist Bioscience Corporation. Feel free to comment below, and I will be happy to answer them when possible.